With a thriving DeFi ecosystem, Polygon is one of the most well-liked Layer 2 scaling alternatives for Ethereum. Stay tuned as we show you everything you need to know about Polygon Blockchain. The Layer 2 scaling solution Polygon, formerly known as MATIC network, was developed in 2019 to overcome a number of Ethereum blockchain restrictions, including transaction speed, throughput, and gas costs. It was initially intended to be a scaling solution, but it quickly changed into a multifunctional ecosystem that has drawn a lot of interest. In the midst of the initial exchange offerings, IEO, boom in 2019, MATIC, its native token, made its Binance Launchpad debut. In order to understand and have a deeper understanding of Polygon, let's look at Layer 2 solutions first. Why do we need Layer 2 solutions, and what are Layer 2 solutions? The Layer 2 solution is a blockchain that operates side by side with a mainnet, in Polygon's example, Ethereum, but handles transaction processing outside of the mainnet, resulting in faster transaction throughput and fewer gas costs. To put it another way, Layer 2s provide a channel of communication between the two blockchains and transport the transaction data information package from the mainnet to the parallel blockchain to complete the transaction at a fraction of the cost and at a significantly better speed, all without impacting the Ethereum mainnet. Due to its extensive and secure architecture and cutting-edge tooling, Ethereum is well known as the go-to ecosystem for most software developers wishing to introduce their dApps, decentralized apps. The Ethereum blockchain is now reserved for the big players due to the network's congestion caused by the huge demand for dApps and the ensuing supply, which caused gas prices to frequently rise to 2 or 3 digits in USD equivalent. The gas tracker on Etherscan can be used to look up the most recent gas prices. Due to the fact that Layer 2 solutions improve Ethereum's scalability and throughput while gaining the advantages of its security features, they have become crucial to the DeFi ecosystem. How does Polygon work? In terms of network nodes, governance, staking, and other capabilities, Polygon operates similarly to other proof-of-stake (POS) protocols. Instead of using the traditional proof-of-work (POW) consensus, which requires a lot of processing power to generate new blocks, the platform uses the proof-of-stake consensus, which depends on a group of node validators to verify and validate transaction blocks on the network. The main difference is that with POS algorithms, token holders validate and verify transactions, rather than having to perform the computational effort that is required in POW methods. Users are rewarded with MATIC, the protocol's native token, in Polygon's POS environment. You have a few choices for earning MATIC. You can join the network as a validator and run a complete node to verify transactions on the blockchain. You get a portion of the fees and freshly minted MATIC as a node validator. Your MATIC incentives will be reduced as a result if you act maliciously, make a mistake, or even if your internet connection is slow. Become a public node by becoming a delegator. You receive other people's MATIC as a delegator and utilize it to assist the network with POS validation. The delegator's voting power increases with the size of the delegated stake. Although this is simpler than being a node validator, there are still difficulties involved. Use the POS bridge, a collection of smart contracts that help move assets from the Ethereum mainnet to the Polygon sidechain, if you want to move money from the Ethereum network to that of Polygon. The POS bridge serves as the foundation for transferring assets from Ethereum to Polygon, where they may subsequently be used to engage with the ecosystem's blockchains and apps. Of course, you'll have to pay a transaction fee in ETH, which can be pricey. However, once you're on the Polygon network, transactions are quite affordable, less than $1. All Polygon-based blockchains are connected to the Ethereum network and one another via the Polygon protocol. Additionally, it enables chains to access Ethereum and adopt its security mechanism. The Polygon Software Development Kit, SDK, a set of plug-and-play software tools that let developers release their own completely customizable blockchains and DeFi apps, was unveiled by Polygon in May 2021. Although Ethereum is now a fully fledged multi-chain system, the major goal is to make it even more so. However, due to present restrictions and a lack of organization within the Ethereum ecosystem, it is more difficult for developers to work on their projects. With its Polygon SDK, Polygon seeks to strengthen the ecosystem by focusing on three key ideas: its compliance with Ethereum, flexibility, and extensibility make it an adaptable platform for developers eager to work on infrastructure and scaling for Ethereum. The Polygon SDK has two editions. Standalone chains compatible with Ethereum are supported in the initial iteration. These independent blockchains are responsible for their modules and security. While maintaining their independence, these chains can communicate with Ethereum through the Polygon bridge in order to transmit arbitrary messages or transfer assets. With its own set of modules and tools to provide developers with even more power, Layer 2 chains and additional types of chains will be supported in the second version. What are the utilities of Polygon? Almost everything that you can do on Ethereum is possible in Polygon, but without the hefty gas costs or the slow throughput. From being a basic scaling solution, Polygon has evolved into a large and complex ecosystem with a variety of applications for both users and developers, including the creation of Ethereum-compatible blockchains, the use of Ethereum-based decentralized applications, dApps, the creation of non-fungible tokens, NFTs, the ability to serve as node validators and delegators, the ability to stake MATIC, and much more. Aave or Curve Finance, decentralized exchanges like SushiSwap and OpenSea, the most well-known decentralized NFT, non-fungible token, marketplace, are just a few of the successful enterprises that operate on Polygon. Instead of using Ethereum, you can use Polygon as the foundational blockchain for these protocols. For instance, OpenSea enables you to select Polygon as the primary network and utilize it whenever you trade NFTs. All you need to do is connect your compatible wallet, such as MetaMask or Coinbase wallet, to OpenSea. However, it should be noted that not all protocols built on Ethereum have their own Polygon iterations, and in this way there are certain restrictions. The entire Polygon ecosystem is powered by the ERC20 MATIC token. It is employed to cover governance costs as well as gas fees and staking. With a maximum supply of 10 billion, according to CoinMarketCap, there are currently 8.73 billion MATIC tokens in circulation. The MATIC token had a meteoric rise in price as a result of an expanded use case after being renamed Polygon and adding additional features for ecosystem developers and consumers. By overall market capitalization at the time of writing, in September 2022, it is the 12th largest cryptocurrency. 4 software experts with extensive experience in software development founded Polygon. At the moment, Polygon's co-founder, Jainty Kanani, serves as CEO. Together with co-founder and Chief Operating Officer Sandeep Nailwal and co-founder and Chief Product Officer Anurag Arjun, he worked on the project. In 2017, the three came up with Polygon. Its previous name was MATIC Network. Initially, financial support came from Mumbai-based friends and relatives. However, despite having its origins in India, Polygon continues to draw investors from all over the world. 2019 saw Polygon secure more than $450,000 in 2 rounds of startup funding. The business has received about $450 million in capital from different investors. Among Polygon's expanding list of backers are the billionaire Mark Cuban and angel investor Pelagie Srinivasa. The benefits of Polygon for Ethereum are not in competition with Polygon. It is actually dependent on Ethereum and vice versa. The goal of Polygon is to use the Polygon network to build infrastructure that can support the widespread adoption of Ethereum. As a result, Polygon depends on Ethereum more than Ethereum does on Polygon. Given that Polygon is based on its own blockchain, this is expected. The primary drawback is the possibility that moving to Polygon for speed may diminish the value that Ethereum has achieved. In some regions, Value dilution might even prevent Ethereum from adding more direct users. In other words, Polygon makes Ethereum better, which encourages more people to utilize the Ethereum network. The value of the Ethereum blockchain will increase as more users freely lock their money there, notwithstanding the possibility of stealing the total value locked (TVL) from Ethereum. One of the most intriguing DeFi projects now under development, Polygon offers the DeFi community a bright future in terms of scalability and blockchain interoperability. We might soon witness a massive influx of projects prospering on the Polygon ecosystem, thanks to its extensive collection of development tools, its cutting-edge mechanism and modules, and its full support for the Ethereum Virtual Machine, EVM. Nobody can predict with certainty how MATIC will achieve success in the future, but the MATIC team certainly has a forward-looking vision, and the MATIC network and its coin appear to be here to stay. Consequently, it can be a wise investment for your portfolio. The use of blockchain in everyday activities has only recently begun, and scaling solutions like Polygon can democratize the technology by assisting developers in creating their own independent, individualized, and interoperable blockchain networks. Instead of buying into the hype, developers and investors should fund the technology for its own purposes and financial viability. As profitable as they are perilous, the Bitcoin market and the blockchain industry. It may be beneficial for MATIC coin to be a part of that if everyone takes a little caution in order to develop a solid crypto portfolio. The content in this video is for entertainment purposes only and hence should not be considered financial advice. Do conduct your own due diligence and consult your financial advisor before making any investment decisions. With that, we have come to an end. See you in the next one.